Hi everyone, welcome to today's webinar from Ciphr, Goodbye P11Ds and Hello Payrolling of Benefits in Kind, Getting Set for Change in 2025-26. We're delighted to have you all with us today. I'm Catherine, I'm Head of Content here at Ciphr, and joining me are Julie, a Managing Director of Payroll here at Ciphr. Welcome Julie, how are you?
Very well, thank you. Lovely to join the session and meet all these lovely payroll people that have joined. You see we've got lots of attendees already, which is great.
Yeah, thrilled to have more than 400 with you on the call live for us today, which is amazing turnout for a very dreary Monday morning. And Claire, welcome, our regulatory analyst. How are you?
I'm good, thank you. Happy to join everyone on a Monday morning, as you say. Bit dismal, but it's great to be chatting payroll.
Fantastic. I'm just going to run through a couple of introductory slides before I hand over to Julie and Claire. Here's our agenda for today. I'll just share a little bit about Ciphr if you haven't come across us before handing over to Claire and Julie, who'll run through a history of P11Ds, the challenges of payrolling BIK, employer considerations, employee communications and education, what's next when it comes to payrolling BIK, and we'll also have time to answer your questions. Speaking of questions, do say hi and chat amongst yourselves in the public chat. Please share if you feel comfortable, names, what you're working on and where you are in the country, as well as sending in questions for Julie and Claire, and we'll bundle those up and get to them at the end. If you haven't come across Ciphr before, here's an overview of what we offer. We're a top people management solutions provider here in the UK, and we have a strong payroll offering both in terms of payroll software and also bureau or outsourced payroll, and that integrates with our central HR solution and other solutions that you can see on our screen now. We won't go into those solutions today in any depth, but if you want to find out more about us, you can find our website at ciphr.com, or you can email us at info@ciphr.com, and we'd be delighted to arrange a time for our experts to walk you through some of our services and software. We have a team of more than 200 experts here waiting to help you if you are a current customer or a potential customer. Many of those teams are former HR and payroll experts themselves, having previously worked in-house. So we have a huge amount of expertise and strength in our teams. And with that, I'm going to hand over to Claire and Julie. Thank you very much.
Thank you, Catherine, for that great introduction. So I'm going to start off this session talking about the history of P11Ds and is it time for a change or do we have a choice? So starting off then, for those of us that are old enough, maybe, P11Ds were introduced in the early 1960s. This might account for why some of those values and restrictions on values are still quite low. I think the example I would give you is the relocation one, set at a mere £8,000, which we know is not sufficient to cover any form or even a fraction of relocation. So moving on from the early 1960s when they were introduced, nothing much happened then until April 2016 when the voluntary payrolling of benefits in kind, or BIKs as we know them, was introduced. However, there are still things that we can't currently put through this payrolling process. Interest-free and low-interest loans and living accommodation provided by the employer will be the two key things that we need to address, or HMRC will need to address, because there's no process in place for them at the moment. Also, we need to look at Class 1A national insurance contributions. They can't be payrolled at the moment, so we still need to do a P11DB. What that will mean for the future, we don't yet know. So then we moved on to January this year. It seems like a lifetime ago, but HMRC were very kind and announced that benefits in kind will be mandatory from April 2026. So they gave us just over 2 years notice. Plenty of time for us to get our act together, in their view, at least. So 2 years actually isn't very long within payroll software testing, designing process. They've made some other alterations. So from May this year, agents were able to register, as assuming they have the right permissions from their customers, to benefit in kind particular payrolling, to payroll certain benefits and expenses via the online service. Now, the problem with that is it was already too late for any supplier or provider to be able to do that for the 24-25 year. So effectively the 25-26 year is the first time that we'll be able to do it.
And it's worth mentioning as well that if your payroll is outsourced, your agent in effect is your payroll bureau. And what this means is your payroll bureau can now register for payrolling your benefits from the start of the 25-26 tax year. Now, we highly recommend getting ahead of this one, because this type of a legislation change is the type that ends up catching people off guard. And we don't want to end up in a situation where there are lots of organisations coming to 26-27 not prepared for payrolling benefits, and suppliers like us and service providers like us, you know, we're not able to cope with a mass of all your customers coming together at the same time saying, hey, can we now migrate onto payrolling benefits? Because it's a resource kind of challenge. So my advice to everybody would be, you know, to avoid a potential risk, I'd recommend that you kind of act now, and if you're in a position to, think about going live with payrolling in April 25, and that way that completely de-risks you. Now, we know there are still some items we're waiting on from HMRC, but we'll come on and talk about those in a minute. But if you're able to, you know, just take the pressure off yourselves, get yourselves registered now, and aim to move over come April 25.
Oh, broken it. Sorry. Okay, so did we do that one? So what the future holds for us then? Well, benefit in kind mandatory payrolling from April 2026 is what we know at the moment. Consultation is still ongoing, so that hasn't finished. It's still open. There's still discussions going on. There are certain questions that we definitely still need to be asked and answered. Draft legislation is expected later this year, but as with a lot of things, with the election that happened, all of this was announced pre-election, so we're not quite sure when and where that legislation will land with us. And HMRC have promised us guidance before 2026. But with experience, that could be as late as December 2025. So we do need to consider about the stuff that we want to put in place, and look at how we can help ourselves moving forward, I think is the way I would phrase that one. So Julie's now going to give us a bit of a oversight on the challenges of payrolling benefits in kind. So over to you, Julie.
Thanks, Claire.
Oh.
So things for us to consider. So HMRC are still in consultation. So there's still a few outstanding items to resolve. But what we do know is the last P11D submission will be for tax year 25-26. After that, P11Ds no longer exist. That sounds like a long way off, it really isn't. These things catch us out because, you know, end of next tax year sounds way off. It will be here before we know it. It's going to be easy to adopt any new changes HMRC put in. Therefore, the recommendation again is go live on your payrolling of benefits from next tax year if you're able to do so, because once you're payrolling, any changes that come in, your software supplier will update the software. You can then adopt those changes, and you're not worrying about hurtling towards 26-27 and having a panic to do your mass migration. So guidance is going to be iterative. It always is with these types of legislation changes. But we're going to talk to you about how we can support you with that as well, to make sure that you don't miss out on any of those updates. Thanks, Claire.
Okay, so I'm now going to look at a few of the possible, this isn't a definitive list, but the employer considerations that we need to be, well, considering, really. So first thing we need to do is make sure that everybody is keeping up with HMRC updates. We will be doing so, and we will share any information that we get, but sign up to HMRC updates. Be aware of any other places that updates are coming from. Expenses and benefit providers will be another key one to keep an eye on. You need to be looking and reviewing your current process and the systems that you have in place. Look out at what your process is or would be for leavers. And also we need to look out for the 50% regulatory limit. Don't worry, we're going to go into all of this in a little bit more detail in the coming slides. What about Class 1A NIC? What do we need to keep in mind for that? What about training your teams, communications? What are the new requirements? Plan and schedule your communications. The right communications to the right team at the right time will make life so much easier for everybody. And as Julie said, and we will continue to say, start now. Keep looking at what you can do to move things forward now, rather than the lastminute.com process that often catches everybody unawares. So what is it we should be looking for? Julie, over to you for this one.
Thank you. So we've put some helpful resources together for you in the first block. So do sign up to the HMRC updates. You'll get updates on lots of things, HMRC, but you definitely will also get the P11D ones. And it's really easy to do. You can just sign up, give them your work email address, and then you'll just receive the email updates. There's professional bodies that you can check in with as well. So you've got legislation.gov, you've got CIPP, Gov UK, but also if you're not already following us on LinkedIn, just go on LinkedIn and follow Ciphr. What we'll do, as we get updates from the consultations, we're going to do micro webinars. So micro webinars are like a 10-15 minute kind of flash update on any changes that HMRC have agreed and published. So we'll share them with you. So whether you're a customer of Ciphr or not, that doesn't matter. We're all payroll professionals. We're all in the same boat, and it's our jobs to help each other out. So do ensure you're following us, because that way you'll get all the invites. So there's some useful material resources for you. Then the next thing I wanted to talk about is reviewing your current processes and systems. This is really important. So you'll need to assess what benefits in kind you currently offer to your employees and how they're currently processed. Ask yourselves, are you registered for payrolling? If not, get yourselves registered. There's nothing stopping you doing that today. But you do want to get ahead of the queue with your supplier and book your configuration consultancy as early as you can in advance. Now, you can do the configuration way before the start of a new tax year. You know, you could do it this month, and then at the end of the tax year, if you've adopted any new benefits, you just, you know, ask your supplier to add them in. What you want to avoid is ending up clashing with hundreds of other customers all asking for the same consultancy at the same time. So let's think about this calmly and clearly and plan ahead. Claire.
We also need to look at the 50% regulatory limit on tax deductions. So this was introduced to ensure that an employee cannot pay a tax deduction greater than 50% of their taxable pay in a pay period. That applies purely to PAYE income. So there was a change to the rules around that when benefits in kind began to be payrolled, specifically to exclude them from that calculation. But what if the employee is on a reduced or zero pay and still has benefits coming in? What do you do with anybody that's still got benefits that need to be taxed via the payrolling system? So this is what I meant when we said we've still got lots of questions to be asked and answered. We're actually expecting this limit to be amended to take account of benefit in kind payrolling. But again, we don't have that detail. It's an assumption that it will be removed, but it's a case of watch this space and see what HMRC's guidance tells us, particularly around those leavers or those with high benefits in kind, but potentially lower pay for whatever reason. Back over to you, Julie.
Thank you.
Oh,
So,
no? Yes, me. Is it me? Yeah, it's me. I'm sorry. I'm rubbish. It's Monday morning and I'm not quite awake yet. So, okay, one of the other things that we need to look at is what happens if an employee makes good some or all of their benefit. And by that, we simply mean they make contributions back to the employer, which negates the value of that benefit. It reduces the cash equivalent value. You need to be checking what your process is to ensure that the full cost of that benefit has been made good in the right time frame. If it's been partly made good, what amount should you be payrolling? So, for example, if they say they're going to make good 50% of the benefit throughout the year, and you come to the end of year and they haven't, and you've not payrolled enough, there's still a tax deficit going on there. Car and van fuel would be a prime example of this. You don't know what you're going to use. Van fuel is a flat rate, but consider what your process would be to keep checking that those contributions have been made in a timely manner. And what about if you can't, as an employer, deduct the full final value from the final payment of the year? So what is that process going to be if you know there's an outstanding amount? As I said, lots of questions, not a lot of answers right now, but we also look at what we need to do for leavers. What's your process for leavers? How do you deal with benefits that don't cease on the final day of employment? They often do, but in some cases they don't. Somebody might be entitled to keep their vehicle, for example, for an extra 6 months under their contract of employment, or their healthcare runs for the entire year and you don't cancel it. Whatever that is, what is your process for that? How do you get that final tax back? What if you can't take that final value, the complete value from their final payslip? Currently, you can flip it to be a P11D. You can move that additional charge onto a P11D. But that's going to have to change if P11Ds are no longer being accepted. And HMRC are quite clear in saying they're not going to accept any P11Ds after July 2026. So we also then need to look at the considerations of Class 1A NICs. Instead of an annual cost, this could become a monthly cost. It could impact on your cash flow for an organisation, and that could have a significant difference. So that all needs to be put into budgets, and we all know how much we love participating in budgets and communicating that information. And what's the returns and payment process of that going to be? Again, we don't know right now, but there is going to have to be a change somewhere along the line for what that's going to what we're going to have to do for that. So again, more considerations, more thought processes. If you're involved in your budgeting and you should be, as payroll professionals, we should be involved in the budgeting process for an organisation. Pop in that, Class 1A NICs may become a monthly fee. And then we're going to move over to Julie for more considerations.
Thank you. So think about training your payroll and HR teams. So they're going to need to be prepared to handle questions from employees. Have your migration plan clearly documented and shared across the organisation. You need to plan your communications kind of well in advance, and you need to first of all think about which employees need to be communicated to and what we're going to communicate to them. So what change is taking place, when is it taking place, and what does that mean to them personally? And some of your employees will have very different impacts from this change. But ultimately, our advice is it's never too early to start the communications. The more information that you can provide up front, not just to HR and payroll people, but to your employees that are impacted by benefits in kind, the less stress it's going to be for you when you get to the go live stage. What you don't want to do is end up being bombarded as you're trying to go live with your payrolling of benefits. So, start your communications today is our recommendation.
So I'm a clear advocate of communication and education. Anybody that will have known me from my past life, communication, education particularly, is a key thing. So what are we looking at for this? You will need different approaches dependent upon if you already payroll some of your benefits or all of them. What about those of you that have no payrolling going on at the moment? What is it you need to do? You're going to need to explain the changes to your employees. You're going to need to clearly outline how those changes affect their payroll and tax. And if it was me, I would be preparing some clear examples so that they can see in black and white the impact on their pay, so that they also can budget. In some cases, there will be a fear factor that they are being taxed twice on the same benefit. So we're going to need to deal with that question as well. And some people just simply don't understand the taxation of benefits in kind anyway. We know that. They just think it's, they're getting a free gift and it's fine. They don't need to worry about any tax on it. The more information you can provide ahead of time, the fewer queries that you will have to deal with. Now, for me, it's always been about supplying as much information as I can. That way I don't need to talk to people at the point when I'm really busy, because I've already given them as much information as possible. But that said, we also know that there will be people that don't read the communications that you send out. Some people just don't read what you send. So you might need to arrange a discussion session, an open round table, a Teams drop-in, whatever it is, to allow those questions to be dealt with ahead of those deadlines. Prepare an FAQ document, stick it on your company intranet site, or however it is that you communicate, but do be prepared for those questions. And most importantly for me, educate the people that are going to be answering those calls, the frontline team that are going to be addressing those questions and those calls when they come in. We don't want them simply saying, I'll have to find out and come back to you. It just makes the whole process slower, less efficient, and actually you're doubling your workload, because if you could answer that question there and then, you haven't then got to find the answer and go back. So it's much more efficient. It looks better on us, but you do need to educate and make sure those people, whoever they might be, who are answering those calls and questions, are well informed. So over to Julie for what's coming next.
Thank you very much. So just to summarise then, so we all know it's going to be mandatory that we have to payroll benefits from April 26. It's worth mentioning as well that all payroll benefits must be included on your FPS submission. So talk to your payroll provider just to make sure that they're all over this already. You don't want to get caught out when you get to go live that there are any kind of missing fields on your FPS file. So start those conversations now. And there's talk of a potential for us having to issue employee statements, so they might be needed. So this will be a statement for anybody that's got any payrolled benefits. Have a think about where you're holding your data around the payroll benefits. So is it all in your payroll system? Have you got some data in your HR system, some in your payroll system? Because ultimately, if we do have to provide statements, we've got to be able to extract that data out to upload it into some form of a statement. So have a think about where your data is held and how you're holding it. And just to reiterate, start your communication plan with your employees now. Just get ahead of it. We don't want this to be a last minute thing. We definitely don't want this to be a last minute thing while we're trying to process year end and start a new tax year as well. So, you know, just cut yourselves as much slack as you can from a workload perspective. Get your plan together. If you can go and move on to payrolling your benefits at the start of the new tax year, do that. You'll welcome that. And just plan ahead, keep talking with your staff, make them aware of what's happening when it's happening. And if you do need any more information, you can always reach out to Claire or I. We're on LinkedIn. You don't have to be a Ciphr customer. We're all payroll geeks. Just come and talk to us about it. We're always here to help.
Yeah, so as Julie said, yeah, we're all in payroll, we're all in this together. We all need to deal with these challenges. So what is it we're going to be doing to help you with these? Well, we will be running more sessions as and when more information becomes available. We will be doing little short information shares with you. We're watching and waiting along with other industry experts to see what's coming next. The change in government this year hasn't helped any of us. It's all a very much a watch and wait. Currently waiting with bated breath for what's going to be in the budget and what's going to impact us there. But again, we'll be sharing. So it's a case of be prepared, as Julie said, keep your eyes open, check relevant websites that you use for sharing of information, gov.uk, legislation. Please follow Ciphr, Julie and I on LinkedIn, CIPP, CIPD. There's a whole host of knowledge sources out there, whichever ones are your favoured ones, but do make sure that you are watching for that information coming through, because it will come through in dribs and drabs. But we want to keep on top of it. We want to be in front of it so that we are prepared. Didn't want to move.
Thank you. So next steps then. So for existing Ciphr customers that are on this session, I wrote to you back in August with the migration plan. So if you haven't already done so, please contact your account manager so we can get you scheduled in. And look, we're just going to take care of the rest for you. For those of you on the webinar that are not current payroll customers of Ciphr, if your account manager hasn't reached out to you already, then contact your account manager. You need to find out what is the plan from your existing either service provider or software supplier. Find out when they're planning to start the migrations off of P11D onto payrolling. If you are in a position to kind of go live at the beginning of next tax year, aim for that. Just get ahead of it and talk to them. You just don't want to be in a position, and this legislation change is one of those, and we've seen it historically, that causes problems because of the clash of when it starts. You just don't want to be caught in the backlog. You don't want to be in a position where you're kind of panicking at the deadline date as to whether you're going to be able to get live or not. So you engage that conversation, you instigate the conversation with your supplier would be my recommendation.
But just
and
to
then,
add, oh, sorry, Julie, I was going to say, just to add, there are still an awful lot of employers out there that are doing their P11Ds manually. They don't have a software supplier. They think they've only got a few benefits in kind, so it's fairly simple for them to do manually. Even those people, they're going to have to come on board with the payrolling. So that's a much bigger change for them. And to start looking now at what you're going to do about meeting that requirement.
Really good point. Yeah. So get the conversations flowing now is the advice. And obviously we're here to help if we can. And on that note, it's time, Catherine. I don't know if you're yet for Q&A.
Yep, I'm here. Thanks, Julie. Thanks, Claire. We've had loads of questions come in, some of which you guys have managed to, I think, solve amongst yourselves, which is brilliant. I'd love to see that kind of knowledge sharing. I know pretty much nothing about payroll, so I'm going to be treading gently with these questions and putting them to Julie and Claire, but we do have a good chunk of time here to run through them. So I'm just going to start from the oldest one and work downwards. Do we know what the deadline is to register for 25-26?
It needs to be in advance of the tax year.
Okay, great. Can we check somewhere if our company is already registered for payroll in BIK?
Should be able to do that on HMRC's website.
Okay, awesome. Will P11D be affected? We already payroll private health too, but still need to provide a P11D for NI purposes.
Yeah, that's one of the processes. We're not clear about how they're going to change, but it will require a change because currently it is a manual process and that's what they want to escape from.
Awesome, thanks, Claire. This one is a bit more of a specific circumstance. So Vicky from Snow's Motor Group says that they process average vehicles in the P11Ds because sales execs use multiple cars every month. How would she process, for example, 10 different cars each month through payrolling?
There are separate rules which I'm not 100% up on without going and checking, but there are separate rules for the car automotive industry around multiple cars. So my suggestion would be to go look at those particular rules on HMRC's site. I've seen them, I just don't recall them. If you struggle with that, please feel free to reach out and I will happily look to help you with that as well.
Thanks, Claire. Yeah, I know that's a real problem for automotive sector. Will there be a double hit to employees' tax when this is processed through payroll for the first time? Their code will be amended to reflect benefits in 24-25, and in April 25, they will be taxed straight away in 25-26.
Potentially, yes. We're waiting to see if there's any transition rules going to be applied, but yes, there is potential for that to happen.
Okay, and that's where all the stuff you've been talking about education and communication comes into play, that if that is a potential risk, then everybody knows that might happen.
Yes.
Okay, great, thank you. We're whizzing through these. What happens at present for those who are already on board for payroll? Is the class 1A paid annually?
Yes.
Okay, that was an easy one.
But yeah, it's still the same process as if it was completely manual. So it's still paid off the P11DB annually.
Okay, great. Alex says, we payroll healthcare benefit monthly through payroll, but generally we provide a gift at Christmas and the company pays the tax on that benefit directly with HMRC. Will we be able to continue not payrolling the Christmas gift because we do pay the tax?
I imagine that's done under a PSA arrangement, in which case, yes. There's no currently, and I will say that currently, we don't know what the future brings. My crystal ball failed me a long time ago. But I'm not aware of any potential changes to PSA arrangements.
Okay, great. Sorry, I'm just trying to pass these questions, which with my limited understanding, which can be a little bit tricky. So, is there an ideal time to make the transition from P11Ds to payrolling benefit in kind?
Do you want that one, Julie?
Yeah, well, you have to do it at the beginning of a tax year, so you can't do it part period. The best time to do it is as early as you can, because you don't want to be one of those organisations that are doing it lastminute.com, hurtling towards the deadline. So the best time to do it is next tax year, so 6th of April 25.
That said, you can register now. You don't need to
Yeah.
wait to register. So you can get all your prep done now, but to actually start the process from April next year.
Okay, great. Will HMRC move to collect Class 1 NICs each payroll? So we are looking at potential changes to systems, question mark.
My gut reaction is yes. There's nothing there as yet, but it makes sense. It makes logic. You know, if you apply logic to it, I would say that is potentially where we're going. We just don't know that information yet.
Okay, thank you. Sheila asks if there's any clarity on how we deal with long-term absence, such as maternity, when no pay is due, i.e. how do you reflect a benefit in kind is still being given?
We don't know yet. It is one of the outstanding questions. We if there is still a benefit in kind, there is still tax due, even though there's no earnings coming through. So how do you pay tax on no earnings? We don't know what they want us to do with that yet. It's one of the really big key questions that's outstanding.
And that's why it's really important to keep up to date with any updates that come out
Yeah.
through HMRC or through Ciphr or through your payroll provider or through other services like ourselves, because there is still so much left to be determined. And we know that some of these announcements come quite late.
They not only come quite late, which is always a challenge, but they're not always articulated in a way that makes sense for payroll. They don't cover all scenarios, for example. So quite often, once the guidance is published, we still need to go back for clarification, because we'll have got test cases that we're putting through our systems that we simply can't work out what we're meant to do with. So yeah, it's an ongoing process.
Okay, fantastic. Thank you. Owen asked, in relation to communications, this potential double taxation, if you'd have any advice on mitigating employees' concerns, like specific things to include in those communications, like key messages or a way of doing it. I think it will depend on an extent to your customer, like your employee base, like and sort of earning levels, I guess, as well. But from your experience, Claire, of managing those communications, are there any recommendations you can give?
My key recommendation is use basic, simple English. Do not use jargon, which we slip into so very easily. Provide examples, particularly if there is a potential for double taxation. Actually show them what that impact is going to be, so that they're not worrying about the volume that might be. For some people, it might be quite significant. For others, it will be an insignificant amount of money. It might only be a couple of pounds, as pay cycle. So work those examples out and be very clear about in which circumstances they apply.
Brilliant. And just on that comms side, I would say if you have a friendly internal comms team or marketing team, I would suggest working with them and asking them to help you with that language. I know from having worked on payroll content, some of it can be quite dense for people who don't know what they're talking about, and a fresh pair of eyes from outside your team would help to flag up things that don't make sense before you broadcast that to a wider audience. If you're working
definitely with a non-payroll set of eyes, because you guys always come up with what does that mean? What does that mean? It's obvious to us. It's we speak a different language. We don't mean to, but we do.
Yeah. and also, if you have access to comms experts, they can help you think about a comms timeline as well, like how far in advance, and whether that should be email or through internal message boards, or like through Slack or through Teams, or if you should add it to a company call if you have like town hall calls, or whether you should be briefing managers. They can help to start you think about the ramifications and different ways that you might get that message out, rather than if you just send one email. That's probably not going to be sufficient for something of this size of magnitude. You may want to put together a mini comms plan over the course of a couple of weeks or a couple of months. that is somewhere that I can answer a question about that. Stuart asks, their business gives Christmas week off. As the business technically closes, would they need to declare this as part of a P11D? No. Okay, great. When you're payrolling BIK, does the employee pay NI as well as tax on the benefit, as at the moment just their tax code is altered?
No, it's a tax only benefit. The class 1A NIC is the employer cost.
Okay. When we move to payrolling BIK, do we process the benefits on the monthly basis or full amount once a year?
Usually it's monthly, but you do have to be sensible about it. If the benefit is only 20 quid a year, you're not going to split that down over 12 months. But just think about the logic. Usually it is pay period by pay period, or the number of pay periods that are available. So if somebody joins partway through the year, for example, and there's only 8 months left of the year, you would payroll their benefit for those 8 months.
Okay. How does it work with electrical car salary sacrifice deduction and also payrolling benefit tax deduction for cash equivalent? Both should be on month pay slips, question mark.
They will still remain on the payslip. That nothing's coming off of a payslip.
Okay.
If I'm understanding that question properly, nothing will be hidden. It all needs to be shown on a payslip, regardless.
Okay, thank you. So we've still got questions coming in. How is this going to work with? I'm just trying to summarize the question here. That is, how would it work with expenses in relation to this? Is that a consideration?
Expenses aren't P11Dable these days, unless it's an expense for something like relocation, and then we need to return the difference over and above the entitlement. So the rules on what is a P11Dable item, they're not changing. It's just how we report them and how we tax them is changing.
Okay, thank you. Is it possible to payroll benefits and P11D in the first year, i.e. 2025, in case there are difficulties with certain employees' benefits, for example, long-term leave with no pay?
Yeah, you can payroll benefits from now if you're registered, and if you register now for 2025-26 year, you'll be able to payroll those benefits through the next tax year as well. So okay. It's already up and running, with the exception of accommodation provided by the employer and low cost or interest-free loans. Those are the two that you can't currently payroll. Okay,
great. And we've had some customers asking just about how they set this up and what kind of charges are involved in that. Can you explain a little bit more about that?
That want to be you, Julie?
Yeah.
Sorry, explain.
So just some existing customers are asking how they can go about getting this set up and what additional costs, if any, would be attached to this service.
Okay. So we have a pre-packaged consultancy for this. So it's out of the box. So some customers will have lots of complex benefits in kind. Others will just have standard. We've just got a standard out of the box. It's a 3-day implementation fee charge. And then there's a slight increase on the ARR for the technology. But talk to your account manager. They've got the price book. They've got everything. The main thing is getting you scheduled in so that we can start the migration with you.
Okay, thanks, Julie. I know that some customers have sent me private messages about setting up their payroll in BIK. I will take those offline and get them over to your account manager or respond to you after this call, rather than trying to talk and send you a reply at the same time. So I have those. Sorry if I haven't replied to you directly yet. If we are updating HMRC with employee card changes through the year via PAYE online, Does this limit the potential double taxation on company cars at the changeover to payrolling company cars?
Sorry, can you repeat that one? I missed the first part of that.
Yes, I stumbled. If we are updating HMRC with employee car changes through the year via PAYE online, does this limit the potential double taxation on company cars at the changeover to payrolling company cars?
It should do, because the tax code should be updated on a regular basis, so that it's historically what used to happen was you'd submit a P46 car. The following year, your the details of your car benefit were included on the P11D, and that would change your tax code. But by submitting information earlier, that process is brought forward from it being a year in arrears to being much more current. So yes, I think the simple answer is yes, it does, and it's good practice.
Okay, great. Are we still required to provide employees with a P11D copy when we payroll benefits?
No, because it's on their pay slip.
Yeah.
With the exception of those that aren't included. So it depends really if they payroll all benefits or not. If they don't payroll all benefits, then those that aren't payrolled still need to be provided on a P11D at this point.
Okay, thank you. Gemma is asking just to clarify when the payrolling BIK starts. Is it April 25 or April 26?
Mandatory is April 2026. You can already payroll benefits and have been able to do so for, I want to say 7 years, but I can't count. So it's a bit scary when you do payroll for a living. I think it was 2016, 2017 when it was introduced. So it's ongoing, but it won't be mandatory until April 2026.
Okay, thanks, Claire. Marissa asks, if rent is paid by the employer, is it P11D'd?
Again, accommodation provided by the employer. Rent itself is a benefit. So it depends really whether it's accommodation paid by the employer direct to the provider, or if it's paid to the employee for them to pay. So there's a bit of a query over how that works, but potentially, yes, it's a benefit in kind and needs to be reported.
Okay, thank you. Julie asks, different Julie, you mentioned interest-free loans. Are they classified as a benefit in kind?
Sorry, mentioned interest-free loans. Yes, they are a benefit in kind.
Thank you. Florence asks, our benefit year runs from 1st of June to 31st of May. Does this mean we can only go live in June 25 rather than April?
No, you have to go live in April. You have to go live at the beginning of the tax year. That sounds like your benefits enrolment period you're talking about there, potentially. It would just mean you'd go live in April, and then your benefits renewals would happen presumably 1st of June. So there'll be an open period for changes of benefits. They just happen that June in the payroll, whatever changes people opted in for or opted out of. I think I've answered that question. If I've not, put a note in the chat.
Yeah, I think there's just some confusion about like the when you can start. So I've got a separate question from Sarah, who said they've registered to start this, and payroll are telling me we have to do it this year, although no comms have gone out, and I think we need to wait until next year. But what I think you guys are saying is you can register now, but you can only start doing it from that April. So in fact, Sarah, that sounds great. You've registered, you haven't done your comms, but you have got time before starting. So now is exactly the time to be starting to think about communicating that and getting ready for April.
Yeah.
If you didn't register before the beginning of this tax year, you can't payroll through this year. You have to register in advance of the tax year. So you can register now for next year's benefits, but equally, if you had registered previously, you're able to already do it.
Okay, sorry, I'm just replying to a message. It's all going off in the chat here today, which is brilliant. It's just a lot.
This was always going to be a good one.
Yeah. I apologies if I have I've skirted over your questions. It's probably because I don't fully understand it. But I think Marissa follows up on the rent question, Claire. If rent is paid directly by the employee but recharged to the company, is it still considered as BIK and to be declared on P11D?
It depends how it's processed through the payroll. It's a taxable benefit. So if it's not being taxed via the payroll, then yes. So it would depend very much on the individual circumstances, but you need to watch what you do because of the way the benefit regs work as to who is providing that benefit. So that could be deemed as a rent allowance, which should be tax and nickable, for example, because it's part of the employment contract. So we need to be quite careful about that.
Okay, thank you. A question from Jane. What is the benefit to registering to payroll BIK for the next tax year, so 25-26, with legislation and details still outstanding? Understand there will be an influx of requests, but surely we need to understand what the legislation means first.
As it stands at the moment, you have no choice. You need to be doing it from 2026. Even if you register for 2025, you don't actually have to do it.
You'll just be set up and ready. Okay.
Yeah.
Great. Anna asks, if life insurance invoice is starting in September 25 and I'm registered to start payrolling BIK in April 25, when do I add the benefit for payrolling, please?
When it becomes effective in September.
Yeah, so there's only 6 months of it in that tax year.
Yeah, so kind of just to be clear, you can start, add and change benefits at any point in time once you're live with